Good afternoon and welcome back to Moneycontrol live stream. You're watching the closing bell. I'm Santosh Nair.
And I'm Yatin Mota.
The sixth consecutive session of fall today on Dalal Street, with benchmark indices Nifty and Sensex ending over 1% lower. So the selling fury continues. But interestingly, small and mid-cap stocks were under pressure during the early part of the day. However, towards the close of session, they managed to recoup some of their losses. All sectoral indices ended in the red today. Among the worst hit sectors were metals, auto and banks. You also saw a sharp uptick in the volatility index. It rose by close to about 2.5% and has now risen to 11.54. And it was a tough day for put writers on the Nifty because of the steep fall, and also today being expiry. So you had a lot of those positions having to be squared off, and it is said that brokers were saying that a lot of traders who suffered heavily in their options trade would have tried to hedge it by selling some of their physical shares, so which is what led to the weakness in the cash market as well. Yatin, so the carnage continues.
Carnage continues, and Santo, you may give it various reasons, but the reality is that there was hammering of stocks across the board in the first half. I'll talk specifically about mid-cap and small caps. There are rumors and reports that one of the hedge funds abruptly shut and they had to unwind positions of nearly 8,000 crores. Santo is talking about how put writers and call writers probably got trapped because the Nifty range really moved out of control during this expiry, because 19,100, 19,300 was an important support zone, and we fell all the way till 18,800. So yes, there could be possible panic selling of underlying shares by few of these option writers, so to say. But if you talk about the markets in the second half, the mid-cap index recovered by nearly 400-500 points, covering half of the losses. The small cap index almost tried to inch up in the green, but lost only 40 points today. So the biggest takeaway today is the mid and small cap index, which managed to recover a large part of the loss on an intraday basis. Obviously, there were a whole host of earnings also, their reactions also, because of which there was smart recovery in few of the sectoral movers. Now, if you look at Jindal SAW, they reported a 10 times growth in their overall profitability year-on-year basis on adjusted basis. Because of that, the stock went up nearly 9%, and so did other pipe companies. If you look at the earnings for Voltam Transformers, they gave a very strong quarter, post which stocks like TRIL and Bharat Bijli also recovered in trade because they are peer sets. And not only recovered, they ended the market in the green. If you look at energy stocks, JSW Energy, that stock moved 7%. Sona Comstar, after strong earnings, moved up 7%. Adani Group stocks, and it has been a very bad expiry for the entire group, which has lost 7-8% on an average. But today also, from the lower levels, stocks like Adani Power, Adani Enterprises, Adani Ports managed to show some bit of bounce back. But yes, there are some stock specific pressure points in the marketplace. And right now, Santo, there are three events in the marketplace. One is the Israel-Hamas conflict in the Middle East. The other is the treasury yields, moving up by nearly 5% for the US bonds. And, the third worry is that, there might be a prolonged slowdown in EU as well as China. So if you were to rank it, Santo, how would you really, look at the biggest threat in the market? Do the US bonds, scare you? Does the Israel-Hamas escalation scare you? At this point in time, as an investor, or probably a person who has seen the markets for last 2-3 decades, what do you think investors are right now watching out for?
Well, I think it works something like this, in my limited knowledge, is that when valuations become expensive, after that the market seems to have its own excuses and then everything once again falls into place. So I think that's what been at play here. Valuations, particularly in the small and mid cap stocks, had become, in the mid cap zone, had become quite frothy, and as a result of which you saw some heavy selling in the last couple of trading sessions. But again, Yatin, I'm really surprised. The most veterans in the market say that this is now the time when you should be shifting from the mid caps and small caps to the large caps which have better earnings visibility, and at the same time they have been around for longer, and if interest rates were to remain high, these are the companies which will actually do well. But on the other hand, what you are seeing is that at every decline more people are rushing to put money into small and mid cap, and today's recovery of sorts, if you may call that, Yatin, in small and mid caps, that was quite surprising. But just to answer your question, I would say that valuation, it's clearly valuations, and after that you have the other factors which till now the market seem to have been overlooking, but now again with the mood having changed, they are saying that, well, okay, one argument when the market is doing well is that doesn't matter if US yields are higher, even if some money goes out of emerging market equity into, let us say, US treasury bonds, it shouldn't make a big difference because we are anyway being driven by domestic flows, so that doesn't really matter. And then as was the case with the Ukraine-Russia war, which there was a lot of panic initially, but then things did not turn out to be that negative. But in this case, crude oil, nobody still has a clue as to how things are going to play out. So far they had been ignoring that. They are saying that, well, crude oil will continue to be subdued. It's unlikely to go up beyond the point. But now as stock prices fall for some time, again you have the same set of concerns. They are saying that yes, probably if FI selling pressure intensifies, then we probably at the time when already a lot of domestic investors are now getting concerned, so that could kind of have a multiplier effect. So at this point, clearly, Yatin, the mood has suddenly turned cautious because of the intensity of the fall, but like we have seen over the last year or 2 years, there is a sharp fall, but the moment things stabilize and then you see a sharp up move in the opposite direction. So it's still very early to call a trend, Yatin.
Yeah, and in the morning, Mihir Vora, a renowned fund manager, was in our studios, and I was just having a formal conversation with him. He just spoke out 2-3 things. The most important one is the US Treasury yield. It is at 5%. Indian bonds are trading at 7.5%. It is probably at a multi-decadal low that the difference between the Indian bonds and US bonds have come to 2.5%, which clearly means that Indian equities and Indian debt might see some FII outflow. But he was also mentioning the fact that our domestic SIP money collection remains robust at 10-15,000 crores. Probably in Q3, Q4, we have institutions like LIC, EPFO, and whole host of these PSU treasuries, buying bonds and equities in the open market. Second half doesn't look very worrying, but yes, near term, because of the volatility in the treasury yields, there might be some mixed signals coming in from the US Federal Reserve. And most important point is earnings. Santo also mentioned there is some valuation froth in the market. Valuations are higher, but the quarterly earnings for select companies have been very strong. IT companies continue to lag. Now the real market action would be into the financial institution banks, which are expected to report good earnings. So let's hope if we are all ticks on the earnings front, probably there would be some valuation support. Else probably we could see another bout of selling. So I think the result season is equally important this time to really justify the Indian valuations at this point in time.
Well, an interesting part here is that if you look at the number of stocks that have been hitting the lower end of the circuit filter, they have not increased dramatically, which probably indicates that at lower levels you are still finding a lot of people looking for bargains, and whether those are bargains or falling knives we will only get to know over the next few trading sessions. And with that, let us quickly move on to some of the stocks that caught our attention in trade today, starting with Jubilant Foodworks. So this stock was under pressure today. The second quarter numbers were short of market expectations. Morgan Stanley has rated the stock as an equal weight with a target price of 493 rupees. According to Morgan Stanley, the weakness in second quarter numbers was on expected lines largely, although there was some slight improvement in the operating metrics, but at the same time the pressure on margin is likely to continue for some more time. Now the 340 basis point decline in EBITDA margins year on year, that's mainly as the company is now investing in new regions, technology, and also hiring a lot of people. So all that has contributed to the weakness in EBITDA margin. At the same time, Morgan Stanley has reduced its earnings estimate for the company between FY24 and FY26 to by about 9 to 12%, as it sees top line growth likely to remain weak for some time, and also the pressure on margins to continue. Clearly, consumer goods, this inflation, initially it was thought that inflation will not have much of an impact, but as you've been seeing over the last few quarters, that pinch slowly seems to be coming through.
Absolutely, and I think Jubilant Foodworks for the last 1 or 2 quarters has been really struggling with the like-to-like store sales growth with the market is really looking at. I think on an overall basis, given the valuations and the FI interest and slower growth, we are witnessing some continuous bout of selling in the counter, and it's very important, I think, for the company to perform in growth, given the fact that in the current quarter we have the festive season and the Cricket World Cup, wherein the company has been trying to introduce new offers, new schemes really to attract customers and ramp up the growth. So let's hope the third quarter earnings for Jubliant Foodworks really steal the show, or probably have some double-digit growth. Else, I think the valuations are quite expensive for FIs to really move out of the stock. But I think Santo, one stock which was consistently the Nifty gainer since the morning was Axis Bank, and that is the stock on my focus list. Jefferies has a buy call on Axis Bank with the target of 1250. Now, if you look at the company's second quarter profits, the pre-provisioning profits, the net interest income, on all counts, the results were much better than the street expectations. Most importantly, the operating expenditure of Axis Bank went up during the quarter because of a one-off, and the one-off was that there was expense relating to the credit card rewards during the quarter, because of which the OPEX optically looked higher. But if you look at Axis Bank's earnings versus ICICI Bank and HDFC Bank, I think relatively Axis Bank has been able to really show its muster when it comes to the stability of net interest income, net interest margins, and also when it comes to the operating expenditure x the one-off expense, they have been better on all counts. One key concern during the quarter was that the CASA, or the deposit mobilization, was not as better as it could be versus other private sector banks. But I think on a net basis, or on a relative basis, Axis Bank has been able to deliver far more better numbers versus ICICI Bank and HDFC Bank.
Also, there's the other thing, Yatin, the stock has been underperforming for a long time, and that also in a way indicated that the market was having low expectation, and as the saying goes, expect to be disappointed and you shall not be. So when the numbers were slightly better than what market had been estimating, you saw the market rushing to reward the stock. Well, and that's all that we have in this episode of Closing Bell. Thank you for watching.
And stay tuned to Moneycontrol for all your business news, views and updates.